Hello and welcome to the Crypto Beat. My name is Tim Copeland and I'm the blog's editor-in-chief. Joining me today, we have the founder and CEO of BioProtocol, Paul Cowhouse. Welcome to the show. How's it going?
Doing super well, Tim. Really great to be here. Yeah, excited to chat with you today about all things decentralized science.
Awesome. Basically, I'm very much a newbie to the space. I don't know a lot about DeSci, so I'm looking to, brush up on my knowledge. To get started, what does DeSci mean in practice? I understand we got decentralized. I understand sort of decentralized tech pretty well. I'm aware of science. What happens when the two are combined?
Really good question. I think the way that DeSci actually works today, it's less about decentralizing science itself. Like we still work with scientists all over the globe. They're still doing science, like often in a laboratory. You still have clinical trials where like drugs need to be given to patients. You can't actually decentralize the meat space component of science, right? But I think what we're fundamentally decentralizing is how scientific information, data, and the intellectual property that results from it is kind of disseminated and shared, accessed and funded. And like I think it's actually why DeSci is kind of an interesting question. And like if we start at a higher level, we can kind of ask like why crypto, right? Kind of Bitcoin exists because I think a lot of people lost trust in the Federal Reserve and kind of in our monetary system. And Ethereum exists because people lost trust in like Web2 based centralized organizations. And so now we have kind of fintech running on Web3 rails, social media platforms, all kind of applications. And pharma and kind of our healthcare system are kind of entrenched in like similar power structures, right? It's like with monetary policy, we kind of have this feeling that something is being taken from us slowly and like silently, right? And so Bitcoin was a way to give people a voice and stand up against that. And I would really argue the same is true for our healthcare and pharmaceutical ecosystem, or for our scientific system more broadly. The US spends, I think by 2030, it's expected to be 26 or 27% of its GDP per annum on healthcare. I think over 10% of that is just spent on drugs, right? Let's pray that DOGE and Elon can make that more efficient, at least from the public government side. And underpinning all of this is really, at least in the pharmaceutical space, is this like 19th century era like patent and intellectual property system, which large pharma companies use to kind of essentially dictate the price of certain drugs and pharmaceuticals. And vice versa, you can look at like how inefficient NIH grant funding is. And so, for instance, in academia, there's this common problem called the Valley of Death. It's really, really challenging for like young scientists and even like renowned scientists to get funding for scientific research. And funding is kind of dictated on the one side, it's very political. And on the other side, it's really dictated by what do large pharmaceutical companies want, at least in the case of biotech, not necessarily by what is good for patients. And so at Whole, we've kind of developed a system that is selecting for treatments rather than for cures, right? And if we think about science more broadly, we've kind of developed a system that I think there's a lot of like, it goes a little bit into conspiracy theories, but often, I think more often than not, I think we're finding out recently that like often conspiracy theories are kind of like have truth in them. I think there were so many early innovations in the 90s around like solar power and electric vehicles that were all like squashed down by kind of the automobile industry and kind of the kind of the oil industrial complex. What DeSci, in my view, is trying to do is make science permissionless, right? And unstoppable. Whereas today, scientific innovation actually operates in a highly permissioned system that is kind of controlled by industry interest, where scientists rely to an enormous degree on government funding. DeSci is trying to move scientific innovation into an open system where kind of anyone can fund anything from anywhere, and any scientific innovation from any corner of the globe can kind of flourish. Because I think the beautiful thing about science is that it's like objectively true. if you can prove that a molecule does something and that is valuable to people, then it should get funded, right? And that simply isn't happening today. And maybe that's kind of looking at the I think at DeSci also from my perspective in terms of what we're working on. There's obviously so many facets of this and like so many areas that we could get into, but I hope that that was a useful explanation.
Sure. So, what sort of people are looking to like fund science? Like, are we talking like large collections of people with smaller net worths? Are you talking like targeting like high net worth investors that just never thought about funding science before, but like, yeah, they give it a go?
Do you mean like who's funding science today, or like in DeSci who's funding
Within
things in
DeSci,
DeSci?
like what's
Yeah,
within DeSci, like how do you see that working?
yeah. So I think it's interesting to look at it historically. So I think the first time we actually began coining DeSci as a term was in late 2021. So in June 2021 we launched VitaDAO, and VitaDAO was one of the first large kind of DeSci DAOs that kind of appeared on the map, so to speak, as a completely novel form, organizational form of funding scientific research. And VitaDAO kind of was born with kind of two underlying design principles. Actually, when we first developed VitaDAO, it used the same smart contract framework that Moloch DAO is based on. And so Moloch DAO was started by Amin Soleimani and was an early stage investment DAO, but was, I think, initially aimed at funding initiatives tangential to the Ethereum Foundation or like Ethereum developer initiatives. Probably more now more relevant than ever, I think. And then out of that, we had, I think, the Lao and Flamingo DAO. And so Flamingo DAO began building a large portfolio of like NFTs on chain. I think it's still quite successful to date. And we looked at this framework and we were like, hey, what if we started doing something similar for scientific research? And so VitaDAO was the first DAO that formed that essentially built a portfolio of IP on chain using a technology called IP NFTs. And VitaDAO is focused on longevity research and kind of democratizing access to longevity therapeutics. And back then, and still today, actually, if you're really interested in longevity science and you're like, I want to back companies, teams, scientists working on longevity, it's really hard to do that. So I think in the US, if you want to invest into biotech startups, you have to be an accredited investor. Then you need to get access to that deal flow. And so that's incredibly hard. It's like some of the most prominent longevity companies are funded by Sam Altman, Jeff Bezos, Brian Armstrong has a longevity company, but most of us are not Jeff Bezos or Brian Armstrong. So actually getting access to funding a specific scientific area, or then even getting access to funding a scientific project, is really difficult for most people today. And so to come to your question, let's ask like, who are the early people that funded VitaDAO, right? And so VitaDAO, actually, there's a lot of people in the crypto space that are interested in longevity research. I just named Brian Armstrong, for instance. He's also really interested in this topic. Vitalik himself often wrote about longevity. Vitalik has donated to a whole bunch of longevity initiatives and foundations. And so there's quite a lot of people in crypto that are interested in longevity. And so now this ranges from, like, initially most DeSci DAOs that we create are funded by the public. There is no like pre-sales, there are no VCs initially. We try to build really innately interested communities that want to fund and further a specific cause. And this works best in areas where there's a high, let's say, crypto science fit. Like if we think about like kind of like a DAO market fit. And so it starts out being the general public, and then actually by now I think there's I'd say quite a specialized I'd say cohort of crypto venture funds or institutional investors that then follow up often after the launches of these DAOs. Another really prominent one is HairDAO, for instance. HairDAO, like if you've been in crypto for long enough, you might suffer from hair loss, unfortunately. And I think there's several crypto leaders where you can also kind of see that they're bold. And again, so here you have a topic where there's a lot of young men online that suffer from hair loss, right? And getting them into crypto is not as difficult. But so to really concretely answer your question, who is funding these organizations or individual projects, it's a crowd, right? And then you often have institutionals that follow up. And over time, what actually happens, so what's happened over the last year really is that we've seen more and more also the tokenization of individual research projects. So first we have a DAO. The DAO builds kind of the DAO puts itself together out of scientists, investors, patients from all over the world. Those people attract research projects. The DAO then selects which research projects to fund. That creates a portfolio. And over time, the DAO can actually sub-tokenize individual research projects. And so by now, I think we have like, we're calling this almost like a new, I think a new user type, which is like a PhD gen, which are actually people that are maybe have a biotech background or have a scientific background and actually dabbling around in crypto. I'll stop there.
Okay, how does that work in terms of like if you're dealing with non-accredited investors? Like, because normally it's with accredited investors, you say there's a lot of the funding. Now you're dealing with like sort of letting anyone take part. Are there any like things you have to be wary of there, or is it just you're able just to let anyone sort of raise money?
I mean, so accredited investors is primarily the reference point here was making equity investments, right? And so if you want to invest into a biotech startup, they often will require you to be an accredited investor. So like if you're a patient that actually has that could use like that might be affected by what a specific biotech startup is developing, it's really difficult for you to invest, right? Or even if you're a scientist that really understands the subject matter, but you don't have what is it in the US, like $1 million worth of assets or something, or 250 income. I don't recall what the exact regulations are. So I think that the beauty of crypto is really breaking that up. In our case, though, these are not, so what most of DeSci is built around are not security-like instruments. There's no revenue, they don't pay dividends. There's revenue, of course, but they don't pay dividends. But they're instead of governance tokens over a portfolio of IP, where the fundamental value proposition is that these IP portfolios will become valuable over time, and that the communities can then monetize them in a variety of ways. In HairDAO's case, for instance, this is being done through, first they launched a shampoo, and now they have an active online shop where the products that the DAO has funded and researched, and even in some cases ran clinical trials around, are now being sold through an online store. This works in cases where you're not subject to like FDA regulations. It doesn't work, of course, in cases that are highly FDA regulated. We have another DAO, for instance, that is focused on nootropics. And here you have a similar thing. You can actually, these DAOs are actually now they launch as research communities. But then the goal, like what's the goal of developing IP or doing science? The goal is to develop a product, right, for people. So we're super bullish on DAOs that are kind of like jumpstarting that and that are able to offer products to their communities very quickly and be able to monetize them.
Okay, cool. So how does like bio work more specifically with the funding aspect of it? Obviously we've seen like ICOs in the past. You've got more modern things like Echo. How do you sort of create these DAOs and raise funds?
100%. I mean, it works. So Bio itself operates as, on the one side, as a curation protocol. We put out we have a really high eye for quality. So actually maybe to go a little bit back in the story, after we launched VitaDAO, so when we launched VitaDAO, we really realized, hey, there's a fundamental new design principle here of like creating an on-chain research organization that can actually produce scientific outputs and real scientific returns, and kind of really drive progress in a space forward. And after we did that, we got approached by a lot of entrepreneurs and patients and other scientists that are like, hey, I want to build a VitaDAO for X, like for a particular area. And building DAOs is super hard though. Like in my experience, like building a real functioning DAO or like just a decentralized community, and then building in biotech is also really hard. And what Bio Protocol on the one side so it has a core function in curating what communities can kind of launch through our system. Consider it like a listing, kind of like a listing process. And then on the where we kind of operate a little bit like a Y Combinator for these different DAOs, like we interview a lot of them and we then help them. We're super hands-on. And then on the other side, we operate a launch pad where these DAOs can raise funds. Typically, they end up, and so our advice and almost like stipulation is always for them to go direct and sell offer tokens to the community. That you kind of have a Genesis auction is typically what we've done in the past. We're using a system there developed by Gnosis, which is a Dutch auction where participants can bid to purchase a certain amount of tokens, and then the DAOs raise in ETH. That's how it's worked in the past. Our most recent one was a DAO focused on quantum biology. No, actually, our most recent one was Long COVID Labs. Quantum BioDAO was in December. It raised 6.8 million in ETH from the public. Was like really monumental. Quantum BioDAO is focused on advancing the field of quantum biology, which is super new. If we can understand, and quantum biology looks at understanding the quantum mechanical processes at the cellular level. And for instance, if we can understand quantum mechanics at the cell level, we can, for instance, begin understanding things like photosynthesis. It's funny, if you think about it, like plants can make energy simply by using photosynthesis. We have solar panels, but yet we haven't been able to replicate that natural process, and it's because fundamentally we don't understand it. And it's the same for like many biological processes. And so this is like a team of MIT scientists, like world's leading quantum biologist. She runs a community call with 70 of the world's best quantum physicists and quantum biologists every week. And they're actually using this funding to develop a quantum microscope. So it's like physical hardware. They just secured a lab space in LA where they're building out the quantum microscope. They have a whole experimental plan designed out. And the token in the DAO is going to be used for the scientists that I just mentioned to bet on different scientific experiments. And then you can kind of imagine it's like a prediction market on the experiments. And if they win, the DAO, if there's enough stake in something that they will run the experiment. And if the researchers are correct, they can almost earn API in in that experiment. And the experiments might then generate novel IP. That is an example. And then recently we had a DAO called Long COVID Labs, which is dedicated to finding a cure for long COVID. Probably affects about 200 to 300 million people globally. It's kind of defined by like people that can't get rid of COVID. They have like chronic fatigue syndrome, brain fog. It can be super debilitating, especially for can affect a lot of young people. And so there, for instance, they're planning a clinical trial with the University of San Francisco, and then a decentralized clinical trial as well with the patient community that they're building up. So both of these DAOs ran through our Launchpad. And at the same time, we're going multi-chain as well with the Launchpad. We've just deployed it on Solana. And have another DAO that is launching end of this week, focused on end of next week, that's focused on rare diseases. Do you want me to go a little bit into more how the Launchpad works, or?
No, that was a really good overview. One thing I was curious about was, how did the tokenomics of the project work in terms of, like, let's say like Bioprotocol is really successful, you solve loads of diseases, that sort of thing. How do you see like value accrual to the bio token? Like, are there mechanisms where it increases like use of the token, or is it purely just like a pure governance token?
No. So we're moving into, I would say, a much more, we're moving into a really strong value capture model. Initially, Bio started out as a governance token, as many projects do. And the community is now kind of moving on and defining a lot of additional utility functions for Bio, and we can go into them. Most importantly, what we actually do and kind of the projects that we work with. So Bio takes 6.9% of each DAO's fully diluted token supply. um, that comes to our system, uh, and that's because we put a lot of work into like building and almost like co-founding these DAOs with the different teams. We have a whole scientific team that is spread across all the DAOs that make sure that they're setting up the right biotech and scientific workflow processes, that real IP results, that they're implementing all our processes. So it's very different than from other launch pads that might be like very hand off and kind of like let the free market do its thing. And we actually think that is super important because I think on other launch pads, they over time always massively suffer from I think scams and rug pulls. And because DeSci is such a new field, we're really focused on kind of protecting the funders that come into our ecosystem and kind of the early users. But very concrete to your question, the most straightforward initial business model that we implemented was taking a 6.9% token supply. And that's actually generated really substantial TBL. So we're often the largest, besides maybe the team members, we're the largest token holders in each of these DAOs. And what we provide, again, what we provide in return, in the past, we've given them 100K, kind of 100K grants, and then kind of all the acceleration support, and then the launchpad. And this is now changing. And so currently, token holders kind of govern this like larger basket of tokens. So you can kind of think of this as like a meta governance token. And in beginning of March, so in about 3 weeks, we're moving into kind of the next phase of kind of a launchpad, which makes it much more autonomous than was previously the case. And the launchpad is then split up. And I don't know, Tim, how deep is your experience with like token launchpads or like DeFi tokenomics?
Not incredibly hands-on. Like I haven't used like a lot of launch pads.
Okay. Have
But
you
I've
used
obviously been
Pump
aware of.
Fund?
Yeah.
Okay.
I've been aware of like launch pads and reported on them for like the last 6 years or so. So, like very
Okay.
broadly aware of these things. Yeah, I tried out Pump Fund to see how it works, and we've been covering it quite a lot, obviously. That's mostly it.
Okay, cool, awesome. And so it's not too dissimilar from Pub Fund or from Virtual as as an underlying tokenomic design. And so it starts with when a DAO kind of gets listed for curation, you'll see like a card of the DAO and like the team and what they do and a description. And then as a bio token holder, you can stake bio into kind of that DAO getting listed on the launchpad. If up to 1 million, no, if up to $500,000 in bio is bonded, that bio is converted and kind of bonded into that DAO. It then gets listed on a bonding curve. And actually, there's two options here. One is still the old auction model, and we're doing that for like high conviction DAOs that need a lot of funding. And the other, but the more prevalent model is that they get listed on a bonding curve. That bonding curve then starts at $500,000 and raises either in ETH if it's on Base or in Sol if it's on Solana. We're deploying it on Solana first. And then it goes from 500K up to 5 million. And once it reaches a 5 million market like FTV, the protocol auto deploys a liquidity pool. But that liquidity pool is now not in Ether and Sol, but it's in bio and that native DAO's token. So the bio that is bonded in the beginning gets used in the end if the DAO successfully graduates. And the protocol then creates a liquidity pool where 50% of the liquidity pool is owned by the DAO and 50% is owned by the protocol. So in total, then the DAO starts out with a 1 million liquidity pool depth that is in bio. And the protocol, and so now like where do bio token holders come in? So bio token holders are the first ones that get to bond, and they essentially for bonding up to 10% of the DAO's token supply. And so they take the most amount of risk, and they also have kind of the duty of protecting the protocol from like rugs, right? So you kind of only want to bond into good ones, but you're also putting your bio at risk. That bio gets locked, and then anyone can invest along that bonding curve. But the capital that goes into the bonding curve is actually funds the DAO. So it's not as in Pump Fund or in other systems where the bonded capital into the curve is used for the liquidity pool afterwards. In our case, the bio that gets bonded initially is used for the liquidity pool in the end. And the capital that gets put into the curve, in this case would be $500,000 raised, is then actually becomes the operational capital for the DAO. Um,
Okay, so
and
how does it? I was gonna say, how does the token like? What's kind of the purpose of the token after this point? Like, obviously, sort of it's raised funding, but then this token continues to exist. Is it that like if they start creating things that solve diseases, people buy the token, price goes up, or if their inventions start like doing the opposite, then people start selling the token. Does it become like uh, look at how well the product's doing?
it's one way to think about it. I mean, like, yeah, why do people buy biotech stocks or pharma stocks? Um, I think here the analogy is obviously different, right? You have an open community vehicle around a particular disease or a therapeutic area. But yeah, of course, like if someone told me that I don't know, if a DAO told me that, I don't know, they cured prostate cancer or I don't know, some kind of heart disease, I'd be like, oh yeah, cool. Like I'll fund that, and like what? It's at this market cap. Like that's a steal if they're actually curing it, right? And then I think you get traditional market forces at play. Hair DAO is actually like a Hair DAO, which I mentioned earlier. Within 2 years, has made more advancements and this is measurable. They have scientific data to back this up in like curing hair loss than like any other like scientific biotech organization dedicated to hair loss. And the thing is that like almost no one is doing hair loss research because like it's not a disease, and so industry doesn't care about it enough, right? But a lot of people that are sitting at home and like losing their hair actually do care, and are very much willing to pay money for solutions.
Yeah.
Um,
In that case,
yeah.
does the value accrue at any point to those token holders? So, like, let's say if you've invested in this in the project that solves hair loss, they create a very successful product, raise and they earn loads of money. Does that go back to the token holders in any way, or is it purely just you're hoping that other people will also buy it later on because it's successful?
I think so. We really try to leave that up to the respective communities. But I think as an entire like what we're beginning to implement, at least from a technical perspective, is almost like fee switches in these communities. And so if you do have so one thing that you can do is when they're beginning to sell products, you can do burn and buybacks through the revenues that those products generate. I think that can be super interesting. And like, so now you can imagine that, I don't know, there's some novel nootropic that is being advertised on TikTok and like it works. And if you're interacting with it as a consumer, you don't need to know anything about crypto. But what happens in the back end is that every time you buy it, whoever's offering that shop actually like buys a token and burns a token in the back end. So I think that's one way. The other way is that the IP that is obviously being developed can be super valuable. And I'll give one example of this. So Pfizer, the pharma company, actually invested into VitaDAO in January 2023. And then they introduced a researcher about 6 months later that they thought was super interesting, someone called Michael Torres, and he was developing mRNA gene therapies that are targeting longevity. So this would be like a life-extending mRNA therapy. And we funded it initially for 90K. And then the DAO did a follow-on tokenization of, so it was initially funded for 90,000. And for 90,000, VitaDAO bought all of the IP. And then the data came back, and the data was very positive. And then in June last year, VitaDAO decided to do kind of a follow-on tokenization where it offered the VitaDAO community to invest into Vita RNA tokens. So this is like now a sub ERC20 that gets spun out of the DAO. That was done at a 1.5 million FTV, raising 300K for 20%. And then the token started publicly trading, and it's now trading, I think it traded up to 30 million FTV. I think it's now back to like 15 or 20. But it's actually based on continuously really good data coming out. And I mentioned these PhD gens earlier. You actually have a bunch of biotech people that are now looking at the project, and we've asked them, they've made analyses, and they're like, this is actually relatively accurately priced, like based on the data that is coming out here. A similar biotech startup that had this type of IP would be worth this much and could be worth much more. So then the next step for this project is actually that to enter non-human primate studies, which will be taking that therapy and putting it into monkeys, like animal studies, like primate studies. And if those are successful, the asset should be worth between 150 to 300 million in the biotech market. And at this point, you would look for like someone to buy out the compound probably, because the next phases of the study get super expensive and DeSci is nowhere there yet. And the DAO still owns, so now the researcher has tokens and there's different collaborators, other scientists that are working on this that have tokens. And if you think about it, the DAO paid 90K and then it let the community follow and finance it, but it's obviously doing work and it's stewarding it forward. But now it still has a position that is like worth 8 million. And if you talk to biotech people, they're actually like, this is a pretty fair market valuation. And if the next step is successful, then you have enormous value inflection points. But now to your question, how does that value flow back to token holders? It's obviously, I think as soon as you begin introducing direct payouts or dividends, you're obviously you're kind of veering into securities territory. We really want to leave it up to token holders to kind of make that decision. I personally think if Pfizer comes and says we want to buy the thing for 200 million, like sure, turn it into security. What would that mean? You would have to KYC those token holders. Like in this case, you have the DAO that owns like a big chunk, right? And then you have like 20-30% minority token holders. And in this case, then there would be a governance proposal. And you would probably need to KYC, like the token holders that would want to withdraw, a payout would need to KYC. I do think the interesting thing here is that because there's real payouts and revenue, it's very different than like other illiquid and like crypto tends to be very illiquid. So you can have something worth 200 million, but you're never gonna get 200 million for it. And here, I think, like pharma deals are done in cash or like milestones. And so I actually think that the potential for liquidity is much larger. These events are much more difficult to engineer though. But you're talking about a real world asset that is cash flow producing, yeah. And then maybe as a last point, we're really leaving it up to those respective communities to make those decisions. Right now, all the tokens that we offer through Bio and like all of the legal frameworks that we have are designed around governance tokens, but we are building very specific like on-chain kind of like buyout frameworks where you could turn on a fee switch if you wanted to. And at that point, those token holders will need to KYC, and you probably have some kind of arbitrage market between people that don't want to KYC and the ones that do want to KYC. And yeah, that's kind of how I see that playing out.
Yeah, it's quite an interesting idea there, because you could have a crowdfunding platform where everyone that contributes like collectively get like a 5-10% share of all proceeds, and and you could just ultimately have a lot of that automatic. Yeah. How much money, I guess, has Bioprotocol as a whole put into science projects, or at least like facilitated the funding of science projects so far?
Good question. I'd say right now, I think with you always have to like how much have they raised and then how much of that has been deployed. I'd say right now it's about 12. So it's like 12 million in direct science funding. And then if you added equity to that, which some of the DAOs did early on, then it would probably be around 15, 16. But I'm personally discounting anything that is equity based just because you can't measure it on chain. And so VDA, for instance, like as some of these tokenization frameworks weren't so developed initially. And so some DAOs did equity based structures initially. But then have really veered away from them again, because ideally you want stuff to be on chain. Yeah.
Okay. And do you think DeSci is going to be the next like meta in crypto? Because I feel like it's something I've sort of heard. It's a term I've heard over like the last year, maybe longer. It's definitely, I've heard it like more often. There seems to be a very like sort of passionate community, but it doesn't feel like it's become like the big meta of the day for an extended period of time compared to say like meme coins, right? Which have been 6 months, 9 months, like they've been sort of the big thing for quite a while now. Like, do you think it's gonna sort of capture that mind share and be the big thing for a while?
I 100% think so. Yeah. I mean, we have to think back. When did meme coins start?
What, 2014? I want to say Dogecoin.
Yeah, and so if you think you're kind of saying like like meme coins have kind of like sustained themselves now for like 6 months. You have to ask like, well, when did they start? And like it's like, yeah, like Dogecoin 2014, and then I think a few of them popped up more. I remember buying some Pepe and Billy in like in 2022, or no, sorry, it was spring or like May 2023. Like that's when I think when meme coins first I think actually had a sustained like uptick. At least that's when like Pepe really I think became bigger, uh, eh, eh, and then actually maybe take another step back. When did DeFi start?
That's a more complicated one. I feel like that one was probably a shorter time frame. Like once you started having like Uniswap launch and other platforms, it sort of became quite big. I think NFTs is a similar one, right? Because yeah, CryptoPunk sort of existed super cheap for quite a while, and then suddenly like rapidly took off.
Yeah, yeah, great analogy. I mean, NFTs started in like 2018, right, with CryptoKitties. DeFi, I would argue, started in like 2016 with Maker Oasis decks, and then 2017 Maker CDPs, like December 2017, and then Uniswap only came in late 2018, UniV1, and then DYDX that was building on CDPs and Uni came, I don't know, mid 2019, and then it took another whole year for DeFi Summer for something to go really viral for a sustained period of time. And so and Aave, I mean Aave was also took really long to build. The point that I'm making with this, DeSci is like barely 2 years old, right? I actually no, I think we're going towards year. No, actually, we're going towards year 3.5. And it's really difficult, right? You're working with scientists, scientific institutions. You're not just creating kind of on-chain games and interaction loops. You need to kind of yeah, you need to onboard a new user group and then like solve really fundamental problems. Um, and so I would argue DeSci is in the CryptoPunks era. Is like everything is really cheap. Like everything in DeSci looks quite cheap right now, and it looks wonky. And like is this gonna scale? Who's really gonna buy this stuff? But it's funding science. And so I think fundamentally, if you're like, it's kind of like asking maybe is art valuable? Well, like can be art can be a lot of things, but fundamentally, if you believe that art has value, then you probably would have bought a CryptoPunk in 2020 or 2019. Same here. If you believe science is valuable, it might make sense to allocate into this. And like if we think about our society, everything is kind of fundamentally based on science, right? Like cryptography was invented by like the U.S. government. It's science, right? The science of cryptography, or the internet, or yeah, modern medicine. And so I 100% think it's still early. What we're really focused on at Bioprotocol and with our DAOs is, I think, providing much more engagement points and touch points for the science actually to come on chain. I think one really big issue that DeSci has today that it's quite hard to measure. Like, what are these DAOs doing? How is the science progressing? And like, how can I, as a PhD gen, actually know what is going on in all these different things? So I think what's really needed is like much better, almost like data tracking and verification tooling. I know Tarun talked quite about this as well when he went on when he criticized DeSci. It's just like that it's not really permissionless yet, and that there's like you can't verify how these DAOs using their funds. I, from my vantage point, know that each of these like a lot of like some of the DAOs that we work with have operated over the past 2 years almost on like shoestring budgets, funding science on top of it. So they're not like um, they're yeah, operated on really small budgets, funding very difficult science. And so I think there's a lot that's needed to scale that. I think what we're really focused on right now with Bioprotocol is essentially enabling scalable systems to come live that actually allow the broader crypto population, other degens, to really track and engage in a sustained way. I think something that's been missing to date is like you'll have a DAO that announces something like they just funded X, but then if you're not able to engage with that in a sustained manner, that's when engagement drops off again. And so I think as DeSci right now, we had these like aha moments, right? And you had a similar thing in DeFi, like I don't know when MakerDAO CDPs launched, everyone like made one, and then like you traded some DAI for ETH, and then you're like, okay, cool, I traded some DAI for ETH, but like doesn't keep me coming back, right? What actually got people to keep coming back to DeFi during DeFi summer was like chasing yield, and yield didn't exist before, so all that you could do with DeFi was like trade ETH for DAI, you could get a loan, and then you could eventually do a leverage long on DYDX. Like that's my user journey that I remember. But then people really kept coming back for like chasing yield across all these protocols. And so I think we're probably 3 to 6 months away, maybe 3 to 6 months away from that happening. No. So what we're doing with Bio is we're launching a fully upgraded version of the Launchpad that I described to you earlier. I think that'll really get engagement up because now it's not, now actually the curation of which DeSci DAOs come online is handed over to the community. It allows a lot more direct interaction between someone that holds Bio and that kind of wants to help one of these DAOs scale. And then it introduces financial incentives and market-based curation mechanisms. And the people that will be using our Launchpad when they're in this bonding curve phase, and our bonding curves are quite different than like a virtual or like a pump fund because the starting market cap and the end market cap are much larger. And so you're curating a smaller amount of assets. But what those people are going to want very quickly is trading information, right? You're going to want to know like, wait, like I founded this DAO or this scientific project, is it going to work? Like scientists, show me the data, give me updates. And so what we're really focused on there then is providing data and tooling. And because like if you can make it 10x in a relatively safeguarded way by investing early into the right science, I bet people are going to figure out what the right science is. And then it's just about providing them good tooling to do that. And then actually, just to finish your earlier question, how does Bio then become valuable? On the one side, Bio has this like AUM model, right? Where we take 6.9% token supply into the DAOs, and then we also use that actively for market making. And the hope is obviously that those DAOs grow in value, and so the underlying protocol value goes as well. But with this new model that we're moving into, first Bio is now used. There's the token sinks for Bio. When you participate in curation, you're actually locking the Bio up for 3 months. But in return, you get into these DAOs at a $500,000 FTV, and many of them, I mean, VitaDAO now sits at 60, HereDAO sits at like 40, despite the recent downturn, and so these can be extremely good, I think, opportunities for token holders. And then once they're on the bonding curve, the trading fees from the bonding curve go to the protocol, right? So now the protocol actually starts making revenue through volume that goes onto these these curves. I don't know what it was for Pump Fund, but it was something like ridiculous. It's like $500 million, I think, last year. And we don't expect that much volume in terms of DAOs, but then the volume on the curve is larger because you're talking about a larger market cap. And then the last point is that because the initial liquidity pools that are deployed are also 50% owned by the protocol, those liquidity pools also generate fees, right? And so we actually moved from like an AUM model both into an AUM and a fee model. And we actually think that in terms of sustainability and value growth for the system, that you're looking at a really strong, I think token model.
Okay, and how helpful do you think has Binance and CZ been in advancing the DeSci narrative?
They've been incredibly helpful. They're actually, so I think they're for all the criticism that they get, they've been one of the most helpful, I think, partnerships that like and professional ecosystem participants that I've ever come across. So Binance Labs invested comparatively, we're really fortunate that they invested a very small ticket. But actually what they did is they really invested their reputation and their network. They got really great partners in. They really helped us with the launch. And in working with Binance itself on through our listing was really great. They really helped us navigate, I think, the right market conditions, and just raised awareness for DeSci. Um, uh, yeah, so no, it's been for like all the criticisms that they get, it's been really great to work with them. Um, yeah, ultimately what they often asked is like, is what we're doing legitimate? And so we actually spent over, I think, 6 months in DD with them, and like had them meet scientists from our ecosystem. Members of our team went to meet CZ face to face. He's really interested in biotech. Explain him everything. We have an ongoing relationship. Um, and they also recognize that it's day one for DeSci and that it takes time to like build and scale these communities successfully. But no, on all fronts, it's been really amazing. It's been really amazing to work with them. I also think Bio had a very different setup than I would argue than some of the other projects that might list on Binance or that might work with them. We raised a very small amount of VC funding uh, in August and September last year. It was under 2 million. It's still a very different market. And then we did a community auction. Actually, and we raised that funding. We did a first community auction in August. After that, we raised a very small amount of kind of like a pre-seed size, and then we did another community genesis in when was that? October to November. That lasted 1 month. Since Bio has gone like live, actually the only people that can trade Bio and that will also be able to engage now with the launchpad are those community participants. Kind of like all insiders, all VC investors, Binance included, like everyone is locked up. They're actually all locked up from the date of listing for 1 year, and then they vest over 3 years. So it's a classic like four-year unlock. And so the only community members that have been able to trade Bio have been those community participants. Also our trade, all our team, all insiders follow a 6-year vesting schedule actually. We chose that because we're like, funding science is really hard. We're gonna need time to prove out this thesis. But because we had this kind of like community like ICO Genesis setup, for us it was a really positive experience, and they were really supportive. They were really supportive of that. And so I think probably the experience can be different depending on like if you have different stakeholders that you're working with. But because we were very community centric, it was great.
Yeah, I did wonder if you have to be a bit more responsible when you're, building a project that sort of like has this sort of impact on science and scientists. For instance, like with a lot of like DeFi DAOs, they sort of had all their treasuries and their native assets, and then they would go like down 90%, and then suddenly they're out of money. Yeah, like do you ever think like actually we got to be quite sensible about how we approach this and not go too degenerate, in some ways.
150%. Yeah. Uh, yeah. I'm trying to think how to best answer that. And so where, for instance, so we borrow against some of our ETH reserves rather than outright like liquidating the ETH, but we keep the liquidations I just briefed our team again to keep them like under 500, which to me is very risk averse. We're also now in a phase where I'm actually really focused on one of the KPIs that I've set is that we should try to within this year cover our operational cost from the revenue that the protocol is operating. So essentially that we don't need to raise further funding, right? No tokens need to be issued that would dilute token holders or issue more tokens to supply into the market, but that the protocol actually generates enough revenue that the entire team's operational costs can be covered. We're currently at about 18, between 50, we're just making a couple of offers. We're about 15 team members. We'll be probably 18 beginning next month, which I think is like relatively lean, I think compared to other teams, and probably we'll get to maybe 25, 30 by mid-year or mid-year Q3, late Q3, and I think something that would be super responsible is is to be able, yeah, like I said, to cover operational expenses through protocol income. Ultimately, though, that would even be up to token holders, like because ultimately, who owns the protocol revenue? It's obviously token holders, and so then you can ask a question like, hey, do we even want to consider having ways for like, do token holders want to consider for protocol revenues to flow to them in some degree? Um, but yeah, I think in the early days of scaling a protocol, you want to because the other thing that you could do, and I think Hyperliquid did this super successfully recently, is like integrating token buybacks early on into your system. Obviously, you need to look at legal ramifications and like how to best implement that. But I think that for me is what it entails to be responsible, like really responsible treasury management, making sure that you keep inflation low, right? Rather than thinking that the way to generate growth is to like issue more tokens and raise more money. Yeah, I think that's where I don't know, where many projects sometimes go wrong, is like raising these massive rounds and then even once the token is live, like selling more tokens. Like that shouldn't be the revenue model, right?
Sure. I was curious, considering we've done quite a bit of a flashback in this episode to a bunch of like projects over like the last many years. In fact, when you mentioned Moloch DAO, it reminded me of 2019 when my former colleague was like interviewing Armin about it and like writing up about the weird and wacky stuff that was going on.
Yeah.
And the stuff about CZ, he came to London 2019, and remember him. That was when he sort of first alluded that he might step away from Binance, at some point. Like he said he wanted to make himself irrelevant, and he mentioned the idea of funding like science projects back then. So I was curious, like, when did you get into the space?
Whew, so taking a full flashback, so I have quite an atypical background to be working in science. But I actually think it's the best. Like those are typically the people that like end up really looking at systems and like changing them. So I spent a lot of my teenage years in like online biohacking communities. These were communities that were looking at like longevity, nootropics for cognitive enhancements. Still big into nootropics today, psychedelics. And then as I got deeper into those communities, looked at like diabetes communities that were like developing their own insulin, found that fascinating. HIV communities developing their own gene therapies. Went on to university and began trading biotech stocks during my studies. I had a really opposite experience trading biotech stocks. Essentially, it's like rife with insider trading, especially on like micro caps. There's like a biotech altcoin market that is like, it's like just as bad as like almost the crypto market. Just that it's like regulated by financial authorities, but like not really so. And so I realized I had an enormous information disadvantage, and that's actually what prompted a lot of my design thinking when I began building in DeSci. Then around the same time, I was part of a trading club, and someone at the trading club did an internship at Bitcoin Swiss. Bitcoin Swiss was like the first Bitcoin broker in Europe. This is like 2013, and then started getting into Bitcoin. Bought a couple of Bitcoin, lost them on Mt. Gox. And then finished university.
Did you finally get it back?
I tried following up on the claim, but it's still stuck, I think, with my lawyer. Yeah. I also like I don't know, like for me it was like if you had something on Mt. Gox, like it was lost, like it was kind of like a write-off. Like it wasn't much for me at the time. And then I bought Bitcoin again at about 300. But no, in 2015, I moved to South Africa. And really got into Bitcoin again there because I noticed the whole, once you live in a third world country or like in a developing country, like you notice the whole issue with like capital controls, moving money in and out of places. And so Bitcoin was actually thriving in South Africa in 2015, 2016 already. And then I met Simon de la Rouvière. So I started doing Ethereum meetups in Cape Town, South Africa. And then in Johannesburg in 2016, started my first company building Ethereum-based applications with a couple of friends in South Africa. And then joined Consensus in 2017. Kind of from that. And so Simon actually, he's like the grandfather of bonding curves. If he actually launched the first with a couple of people at ETH Berlin, he launched the first me market. But yeah, then joined Consensus in early 2017 and left Consensus in June 2018. And actually, from that moment on, began working on DeSci. I published the first article that was kind of saying, hey, what if instead of attaching pictures of cats to NFTs, we instead attach like scientific data, and then what if we slap it on a bonding curve and kind of enable price discovery and liquidity for individual scientific projects.
Yeah. Pretty sure you left Consensus, I imagine, right before I joined, because I was at Decrypt right then.
Oh, cool. Okay. Yeah,
almost
Consensus.
overlapped.
Okay, cool. That's super cool. Yeah, those were like it was a really wild time back then.
Yeah, it was a huge company, which I didn't even understood at the time. Insane number of people.
It was so fun in the first year, and then like I joined when it was just over 100, and I was working on Uport, which was this digital identity system that they were building. That actually informed a lot of my thinking though about like IPNFTs and encrypting data on chain, because it's like if you're like trying to encrypt, like if you're trying to encrypt a driver's license or like a patent or like let's say scientific data, it's very similar. It's just different technical process. But yeah, and then I saw Consensus grow to like 1,300 for 400 people. Like it was nuts. It was actually there's a really interesting chart that someone once did, which is like overlaying the ETH price with like Consensus employees, and you kind of like see.
I mean, it's not wrong. Like every time the price went down, like when it went below, I remember when it went below $100, we all got worried we were going to lose our jobs too. Yeah.
Well, and then I think they did. And then they did, I think, enormous layoffs.
Yeah. They definitely sold quite a bit of ETH over the years. By the way, someone on Twitter asked where they can buy a bio shirt like you have on.
Oh, cool. Yeah, definitely. Yep. Right, I'll show the back. The back is quite sick.
Do you have a swag shop online?
We don't have a swag shop online, but you can come meet us at a conference. We'll have some people at ETH Denver, and then we're going to be at Token in Dubai. Just I don't know, just shoot me a DM and we'll send one to you. Yeah.
Awesome. Alrighty.
We should actually do a swag shop.
Good work. Cool.
Cool.
All right, that's all we have for today. I want to thank Paul for joining this episode, and to our sponsor, crypto tax software provider Awaken, and use the code TheCryptoBeat for $25 of free credit. Make sure to follow the Crypto Beat on Twitch and Spotify, and subscribe to the blog pods on YouTube. And as a reminder, our newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, make sure to read the blog. Thanks, and see you next time.